It's Friday, November 14th, and here's everything you may have missed in business and finance yesterday. In terms of equities, yesterday could have been better. All three major indices ended the day sharply lower. The S&P 500 slipped 1.66%, though I would note the equal weight version of the index outperformed the traditional cap-weighted one by about 0.5%, meaning that smaller companies held up a little bit better than the giants. The Nasdaq fell 2.29%, and the Dow, which has hit fresh record highs this week, was down about 1.65%. Tech names like Tesla, Nvidia, and Google led the losses. Other weak spots included semiconductors, tech hardware, electric vehicles, airlines, and even dollar stores. On the flip side, defensive sectors like healthcare stood out, with pharma and biotech getting their time in the spotlight. Packaging companies and oil majors also showed some strength. Volatility in AI-related stocks and fading retail investor enthusiasm played a role in tech's momentum unwind and the market rotation. Defensive pockets like healthcare were outperforming, while cyclical sectors that rallied on Wednesday lost steam. Interest rates are still a big concern for investors, especially after recent hawkish comments from Fed officials. The data vacuum left by the shutdown also leaves a murky path ahead for Fed officials and makes it tough for investors to anticipate the Fed's next move. The odds of a December rate cut are now no better than 50-50. Next week, all eyes will be on the September jobs report. While the end to the government shutdown was good news for many, it allowed investors to shift focus to what comes next, prompting significant pessimism. Paychecks for many federal workers may still be delayed for several weeks. There's only 46 days until ACA pandemic-era subsidies expire, and there's only 77 days until another potential government shutdown. Uncertainty is just not our friend. Outside of equities, bonds were weaker yesterday, pushing Treasury yields up by 3 to 5 basis points. The 10-year sits around 4.11. The dollar slipped about 0.3%, gold fell from recent highs, and Bitcoin dropped sharply, now well below $100,000 for the first time since May. Oil prices also edged higher, with crude up about 0.3%. A few corporate highlights: Cisco was up 4.6% and was a standout after reporting record AI infrastructure orders and raising its full-year guidance. Disney fell 7.8% after missing revenue expectations, mainly due to weakness in streaming and traditional TV. It's also in an ongoing stalemate with YouTube over ESPN. Robinhood fell 8.61% following a Wall Street Journal report that the brokerage will soon deliver cash to users' doorsteps. Planet Fitness jumped 3.2% on positive growth outlooks. Yesterday, we saw more than 1,000 unionized Starbucks baristas walk out in an attempt to gain leverage in stalled contract negotiations. We also heard that Verizon is reportedly cutting 15,000 jobs in its largest layoff ever. Also, interestingly, a group of hackers used Anthropic's AI tools to automate cyberattacks, infiltrating a number of major companies, reminding us once again to be very careful what you say to Claude and ChatGPT. To sum it up, markets are in a tug-of-war between tech weakness and defensive strength. There's also a lot of uncertainty around rates. This is a great reminder that sentiment and macro trends can shift quickly. Have a good weekend.